Hello, good morning, everyone, and welcome to this morning's live trading session. I hope you're all well and good health and keeping safe with this COVID-19 pandemic. So as usual, this Tuesday morning session is for a couple of things. One is for us to assess the markets together, look for trading opportunities for today. But it also gives an opportunity for anyone who wants to assess the markets for us. It gives you an opportunity to practice that and try and analyze the market for us. So if anyone wants to do that, we give you the opportunity to do that. And then, of course, also an opportunity for questions and answers. Because as you've all realized now with trading, it's a very practical thing. It's a very visual thing. There's some questions that are difficult to answer via text. When I say text, sorry, I mean on the platform or by email. So, it's very difficult to explain certain concepts, certain scenarios on the platform. So again, this is what this Tuesday morning session is for. So if you've had any issues or problems, or you couldn't understand some things we did during the week trading, then again, this is an opportunity to get clarification, ask questions. So again, like I said, this session is for you guys. It's time I've set aside to answer all your questions. So once we've analyzed the market and we've placed the trades, those who have other commitments can log off and get on with their day. But if you have any questions, concerns, issues, you can ask your questions. And like I said, this session would last for as long as it lasts, depending on you guys. So if there are no questions and we place the trades, it will be a very short session. If there are lots of questions, it will be a long session. But like I said, those who have other commitments, you're welcome to log off if you need to get on with your day. And the recording for the entire session will be posted on the platform. Okay, does anyone want to have a go? If anyone wants to have a go, you can either raise your hand and I can unmute you, but if no one is willing to have a go, if you're all still waking up and still rubbing your eyes, I will go ahead. Okay, so there are no takers, so let me analyze the market. Let's kick off. So as usual, we start off by looking at the economic calendar to see what's up for today. Obviously, you also check, make sure there are no public holidays in the UK or the USA. So we know, obviously, I'm assuming you would have checked. Excuse me, I've got a frog in my, maybe I need some coffee myself. So I'm just saying I would assume you've checked yourself to make sure there are no public holidays in the UK or USA, or at least know when the next public holiday in the UK and USA will be, because you don't want to be trading when there's a public holiday in either of those countries. So there are no public holidays today in the UK or USA, so we can go ahead and trade. So the first thing we want to check is the economic calendar. Today is Tuesday, the 6th of October. And again, make sure you're using the correct time zone. So depending on where you're based, whether you're in Nigeria, UK, Canada, America, wherever in the world you are, make sure you adjust this time zone to the correct time zone for wherever you're based, so that when you're checking the times for the report, you're checking the correct time for where you're based. I'm in Rwanda, so that's why it's GMT +2. So all the times I'm going to be referencing is going to be GMT +2 times. So today is 6th of October. The main market we're looking at is the Euro US dollar. So we're looking for reports that could affect the Euro or the US dollar. So as you can see, all these reports from Asia have come and gone, because the Asian market is open from about midnight to about 5 London time. So all those reports have come and gone. We can ignore all these reports of low importance. Well, you note reports of medium importance. So there's a report, well, it's not really a report of medium importance from the European Union. Of course, that's anything to do with the European Union will affect the euro and hence the euro US dollar, which we're trading. That's coming out at 10 Rwandan time. But again, these are not economic reports. It's just a summit meeting and a video conference. So they're not announcing any policy or reports or any economic indicators. So it's just a summit and a meeting, which could obviously drag on for the whole day. But obviously, because it's from the European Union, they're making you aware of that conference. But obviously, it's a meeting and it's not a major conference, so we won't worry too much about that. That's a report of medium importance coming out from the UK at 10:30, construction PMI. And again, like I say, if you're new to trading, it's important you start to read about this report. You just click on the report and read about the report, or you can even Google the report and find out what it's all about. So you can begin to make your own judgments as to whether it's something you would be concerned about or not. But I won't worry about that one. So again, euro area, that's another thing that will affect the euro. The ECB president, Christine Lagarde, is going to make a speech. And again, it's classed as medium because she's not going to say anything major. Again, usually the ECB, the European Central Bank president, which is Christine Lagarde, the Bank of England president, the Fed chairman, the US Federal Reserve chairman, all these people, they know that their statements carry a lot of weight. Their words carry a lot of weight. Their words can affect the market. So usually when they make speeches like this, they're always very vague. They tend to be very vague. They just talk in general terms. So, I mean, obviously, once in a blue moon, they might say something crazy. But again, they are very, very much aware about their position and the impact of their words. So they rarely make any major statement. So again, it's unlikely anything will happen around this time. That's at 10:35. But again, the economic calendar is just making you aware that she's going to be speaking at that time. But like I said, from experience, nothing happens because they're very careful with their words. But again, it's good to check your trade around that time or the markets around that time at 10:35 Rwandan time. Again, you can ignore reports of low importance. And at 2:30 Rwandan time, we have this report out of Canada, balance of trade. Again, we're trading euro US dollar, so this would not have much of an impact on the currency pair we're trading. But if you're trading any currency pair that has the Canadian dollar as part of that currency pair, then yes, you will want to avoid trading that currency pair prior to that report at 2:30 Rwandan time. So this report would affect any currency pair paired with the Canadian dollar, but we are trading euro US dollar. So again, that won't impact us. And then, of course, this one is from the United States. That would impact us, but again, it's a report of medium importance, so that won't stop us trading. And again, like I said, if you're new to trading, you start to read about these reports, so you know which ones to ignore, which ones not to ignore. You can see here again, the ECB President Christine Lagarde, she's still talking. Started talking at 10:35, and at 3 p.m. she's still talking. So like I say, it's a speech. It's not an economic announcement or anything like that, so you wouldn't worry. Well, Russia, we can forget about Russia. Ignore the reports of low importance. At 4:40 Rwandan time again, you can see again the US Federal Reserve Chairman Powell. He too is going to be making a speech. But again, like I said earlier, when the US Fed Chairman, the ECB President, the Bank of England Governor, when all these guys speak, they're very careful with their words and they don't say anything major. So again, that's just to let you know he's going to be speaking, but again, it's a speech, it's not an economic announcement or a monetary policy announcement. So again, so basically, from the euro US dollar point of view, there are no reports of high importance due out today that could affect euro US dollar. There are a couple of reports of medium importance, but again, those reports will not stop us trading, but just give you an idea of the times to check your trade. So basically, we can go ahead and start trading. There are no public holidays today. There are no reports of high importance directly impacting the euro US dollar. So we can go straight ahead and look for trading opportunities. So basically, you could have started trading today from 5 o'clock in the morning, London time. So again, I always remind everyone that this session is more an academic session, you know, to discuss trading, the principles of trading, and answer your questions. And of course, we set the time for this session to be a reasonable time for all of you, so it's not too early. But again, the aim of all this is to enable you to make your own decisions, so you can trade by yourself. You don't have to wait for me and depend on me. So a day like today, if you know what you're doing, you could have started trading at 5 o'clock in the morning, or even from midnight London time, or 5 o'clock London time, you could have started trading. So again, I just want to remind you, you don't have to wait for me. Even on the platform, you don't have to wait for my posts. You can just start trading. So today is a good day where you could have started trading from midnight or started trading from 5 o'clock in the morning. Okay. But the other thing of note, again, I always mention this, it's always good to check the rest of the week, because something coming up later in the week could affect your trading today. So usually on Monday, I tend to go through the whole week and see what's coming up for the whole week. So tomorrow, Wednesday, the 7th, there's a big report coming out tomorrow. So you can see tomorrow at 8 o'clock Rwandan time, which is 7 p.m. UK time, you have the US FOMC minutes. FOMC is a Federal Open Market Committee meeting minutes. This Federal Open Market Committee are the people that decide the US interest rates. And of course, the US interest rate has been announced before, but people are not sure how they came about that decision, because the rationale behind their decision to maintain the interest rates or cut interest rates or increase interest rates, their rationale gives people an insight as to what they're going to do in the future. So this report is of extremely huge importance. Again, you can always check and read about it. So this is a very, very important report that would affect all markets. Again, because it's coming out from the United States, it would affect the bond market, the stock market, all currency pairs, commodities market, all financial markets are affected by this report. It's an extremely highly anticipated report. It's of extreme importance. So, and everybody obviously knows it's coming out tomorrow evening. So the markets will actually trend sideways all week leading up to the report. So again, because we know that report is coming out tomorrow, we're going to be extremely careful trading today, which means we're not, well, I shouldn't say we, but I'm not sure what you guys are doing. So I'll just say I will be very careful trading today, and I will not be having 3 attempts at the market today. So I'll only have 1 live attempt at the market today, because there's a chance the market could trend sideways today, and even the rest of tomorrow leading up to the report tomorrow evening. So in view of that, I'm just going to have 1 live attempt today. And then even if you see on Thursday, there's another big report coming out on Thursday, the 8th of October. You have the European Central Bank. They're also doing a similar thing. They have the monetary policy meeting accounts. So again, that's another big report. So in view of all this, I'm just going to have 1. So we're coming back today. So today, Like I said, there are no reports of high importance, nothing stopping us from trading. But again, you have to put the whole week and everything into context. So in view of what is coming out tomorrow, I'm only going to have one live attempt today. So again, this is why you need to take everything into consideration when you're trading. Okay, so with that in mind, we'll now go to the charts. Now that we know what we're going to do. So we'll start with the swing trade, and we'll use the daily time frame for the swing trade. So we'll start with the swing trade. So look at what the moving average is today. Actually, okay, and this is a good example of what we're going to do. So the moving average today, just put your cursor on today's candlestick for the 6th of October. Moving average today is 1.1803. So from the current live trade we have, I will just move my stop loss to 2 pips above that. So it's 1803. So 2 pips above that will be 1805. So on this particular swing trade, we've gone from risking 100 pips to only risking 2 pips at the moment, difference between 3 and 5. But we can then go on and place a buy order. So again, this is a sell order we placed when the market broke the moving average there, but we can now have a buy order 2 pips above the moving average. So again, we'll go to new order. Again, this is where money management comes in. So again, if you're, for example, if you're using a live account, you can reduce your risk to 0. On the live account, I think one volume is, a volume of 1 is £1 per pip. So you can do 0.01, you can do 10p per pip. So you just work it out. So you can do 10p per pip if you want to risk less from a swing trading point of view. So we're going to buy 2 pips above that, 1.1805. And then 100 pips stop loss, that'll be 1.1705. And click place. There we go. So so that's all you need to do for swing trading. So we placed a new buy swing trade, 2 pips above the moving average, making sure again you apply good money management and be careful how much you're risking per pip. Excuse me. Because so we've got a new pending buy order there, and then the current live swing trade, we've adjusted the stop loss to 2 pips above the moving average. So let's go now to day trading. So I've dropped down to the 5-minute time frame. So the first thing you want to do when you assess the chart is to check the trend of the market. So that's the first thing you want to do when you're analyzing the chart. Is the first thing. So you can see here where the market was clearly trending up, making higher highs and higher lows, and the moving average going up. And then you can see at this point here, it stopped making higher highs and higher lows, and it wasn't making lower lows and lower highs too. So from this point, it started to trend sideways. I think it's just about, this point is slightly higher than that. We can actually check. So this is the high of the sideways trend, and that's the current low of the sideways trend. Let's see which is higher. So I will put my cursor on this one, check the data window. The high there is 1.1797. And the high here is 1.1798. I'll just round that. It's 17983, but I want to make sure it's pretty high, covering the highest point. So I round that up to 1.1799. But you can see the market has formed a market resistance, because you can see the difference between this is within plus or minus 2 pips. Because you can see the high of that candlestick there is 1.17973, and this is 1.179 1.17983. So it's just exactly 1 pip difference. So you can say a market resistance is formed. So let me just draw my line. So that's 1.1799. So I just want to round it up. So that's the high of the sideways trend. And the low point here is 1.1771. 1.1771. So that's the low. But you can see from the low point of view, the market hasn't formed a market support. So that's the first low, but there's no other low close to that. So it hasn't formed a market support. But you can see it has formed, it has formed a market resistance. Okay, so that's the first thing you want to do when you're analyzing your chart, is to check the trend. And we've checked the trend now. We can see the market is trending sideways. We've identified the high of the sideways trend and also the low. And we've also seen that the market has formed the market resistance there. So that's potentially, we can potentially trade, well, not potentially, we are going to trade using the market resistance strategy. So that's the market resistance. So now we're now looking for trading opportunities. Just ignore these lines here. This is from the swing trading, so just ignore them. We're concentrating on our day trading now. So again, just to make your trading easier, I always tell people that, you know, you look at where the market is now. This is where the market is now. So you're saying if the market starts to go up, where is your first available entry point, depending on your trading strategy? So if the market starts to go up, the market resistance is the first available point for me to buy using my market resistance strategy. If you're not comfortable using the market resistance strategy, then if the market starts to go up, your first available point to enter the market is using the pivot point strategy by buying 2 pips above the pivot point line. And then same again, you say, okay, this is where the market is now. If it starts to fall, well, the market hasn't formed the market support. So the first available point for me to trade using my trading strategy is to sell below the pivot point. So I'm going to do that. Like so, I'm going to use the resistance. So I've marked it out at 1.1799. So I'm going to buy 2 pips above that. That'll be 1.17801. So I'll change that to 50 pip per pip. Again, always remember your money management. So that'll be 1.1801. Again, I always say, if you're not sure, bring out your calculator. You're not guessing. I always warn people that this is not video games, you know, especially if you're using real money. And that's why I say you're not really trading until you're trading with real money. And then when you start losing money from silly mistakes, you will learn to take it seriously. So that level is 1799 plus 2. I want to buy 2 pips above that, so 1801. Okay. So if I'm buying at 1801, my stop loss is going to be 1801 minus 20. So minus 20. So that'll be 1781. So 1.1781. And my stop loss, my profit limit will be 60 pips above that. So that'll be 1861. 1.1861. So that's my buy order pending. It's not a live trade, so it only becomes live if the market goes up, breaks the market resistance, and takes my order. Then the sell, I'm going to sell 2 pips below the pivot point level. The pivot point is 1.17657, so you can round that up to 1.1766. So 1.1766 minus 2 is 1.1764. So pending order, sell stop 1.1764. So if I'm selling at 1.1764, my stop loss should be 20 pips above that at 1.1784. And then take profit to be 60 pips below that, 1.1764 minus 60. So that 1.1704. And place. There we go. So right now I have two pending orders. And that's why you can see them there. They're under the pending orders on the trading terminal. They're not live trades yet. So again, I'm only going to have one live attempt at this market in view of the report coming out tomorrow. So if the market goes up and takes my buy order first, I will delete this pending sell order, and that would be my only trade for today. Alternatively, if first and takes my sell order first, then I'll delete the buy order, and that will be my only trade for today. So that's the plan for today. Well, my plan for today. So if you have any questions, you can either raise your hands or send your question through the question box. So like I said at the beginning of the session, if there are no questions, that will be the end of the session. If there are questions, I'm here to answer all your questions. So any questions, comments before we all go for breakfast?
Yes, please. Please excuse my ignorance about.
Oh, no. There's nothing like that. There's nothing like
about
that.
The swing trade. Although I tried listening to it, maybe I missed something. You know, when you just place a buy order now.
Yes.
I know with the day trade, we also take profit, but with swing trade, and I'm sure there's a reason, but I've totally forgotten why. With
the swing trade, you take your profit with the moving average. That's why you keep moving your stop loss with the moving average. So that's it. So it's the market that will determine where it takes you out.
Okay.
So that's what happens with the swing trade. So let me go back to that. So for example, now, if you had bought around that point where the market, if you did a buy around here and you started with your stop loss of 100 pips, then you start moving your stop loss with the moving average like we've been doing with this current swing trade. But it looks like the market is not going to fall anymore. It's going to probably go up and take us out, but we'll see. But if you start moving your direction, like in this scenario here, you'll be moving your stop loss with the moving average. And then at the time the moving average breaks the moving average and then takes you out of the trade and takes your stop loss, then you would have made your profit from how many pips from this entry point to
that place. Right.
Exactly.
Okay. It makes sense.
But you don't know what's going to happen. So that's why. So in this scenario now, if the market takes us out today, we're actually going to lose 2 pips on this trade because the stop loss is 1.1803 and a stop loss is 1.805.
Right.
But if it continues to fall and we continue to move our stop loss with it, then that's what determines your profit. So yes, so that's really the answer to the question, is that it's you moving your stop loss with the moving average, and whenever it takes you out, it takes you out.
So for this one that you're just explaining, and the one that was the initial buy order that you made, there's still a possibility of losing 2 pips.
It's a sell order we are.
Oh, a sell order. Sorry.
Yeah.
So there's still a possibility of losing 2 pips.
Oh yeah.
Okay. So it's until it now takes you beyond the stop loss, then you start making profits.
Exactly.
Yeah.
Exactly. And I think that's the key. It's not to overthink it.
Okay.
It's not to overthink it. It's as simple as that.
Yeah.
It's as simple as, let me bring up the whiteboard. I think that's the problem, because sometimes it's so simple people try and overthink it. So let's say, okay, yeah, let's do this. So this is the market and the moving average. Yep.
Yes.
So this is M, the market, and then this is the moving average. So let's assume this is what you were doing before. You were putting your buy order 2 pips above this. Then let's say the market now takes your buy order at that point.
Yes.
So this is now your entry point. Entry. I should just say EP, entry point. So let's just say for argument's sake, you entered at 1.1484. Doesn't matter. So this is at the point you entered, and then your stop loss was 1.14.
1384.
1384. I need my coffee. Okay, so this is where you entered. Now the market starts to go up. Like I said, I usually wait till it's gone about 100 pips in my favor, like you saw in this live trade, before I start to move my stop loss. So let's just assume that has happened, is now moved. So the moving average is now moving like this. So in this scenario now, if I exactly what we have now, the stop loss is currently at 2 pips below the market. So let's just say it's at 82 now. So if it continues to go up, and then the moving average moves up, so let's say now the moving average here today is 1.1494. Then you now move it to 2 pips below that. So you can now see you're now in profit.
Yes.
If it now continues to go up and the moving average goes up, you now move your stop loss. Let's say this is now 1.1499. Then, you know, you're now making some more profit but it's just this stop loss, you keep moving with it.
Right.
And then if it keeps going up, but obviously you have no idea what's going to happen. This is, you know, this is the future. You don't know if it's going to go up. Exactly. So it's just like in this scenario now we have in this live trade. That's why I'm saying that it's making sure you don't overthink it. Because you can see in this live trade scenario, you know, we're hoping it falls, but again, we don't know what's going to happen. If it doesn't fall, then you're not going to make any money. So it's just as simple as that. So if it continues to fall, then you continue to move your stop loss with the moving average, and wherever it takes you out, period.
Okay, makes sense.
Yeah. Well, I think I'm happy you asked that question, because that's what happened. Because the moving average strategy is so simple that yes, people just tend to overthink it. And when you start to overthink it, it becomes, you know, and of course, apart from overthinking it too, is trying to project the future.
Yes.
So that's another mistake people make. I always say in trading, don't project your feelings or what you think on the market. You base your decisions on what you see and what is happening, and whatever happens, happens. In fact, I'll give you a good example. Yesterday was a good example on the platform, because if you look at the trading we did yesterday, yesterday was Monday, yes, okay. So if you look at the first post I put there, so this is why I always tell people, don't assume, don't try and project, just describe what you see and make your decision based on what you see. And that's why I said trading, you need to be a good trader, you have to be like a robot. Don't bring emotions, feelings. You can now see how trading psychology is, okay, again, coming into play. You can't escape trading psychology and money management. Yeah. Okay, now see the trade we did yesterday. Again, you can see I spoke about what we talked about today, about looking at the economic calendar for the rest of the week, and I knew there were 2 major reports coming out, and I already know I need to be careful. I put that as a probability. Anyway, but this is what I want to show you now. So we can see here, assessing the Euro-US dollar in the morning, the market is currently trending sideways, and R1, pivot, S1 are all within the sideways trend. There are currently no trading opportunities, period. So this is what I saw in the morning. And this is what I'm going to go with, period. I can't say, okay, what if that happens? What if? No, no, no. This is what I say, period. No opportunities is sideways, period. Now,
Yes.
if we now take it to let's follow. Then the next time I review the market, oh, that's actually you again, sharing the post. So if you see, I now see the pictures changed. But although the pictures changed, again, I can't say it's trending up. So again, I said here on review of the market has broken the high of the sideways trend. It's now beginning to form a new trend. I did not say it was trending up.
Yes.
I did not say it was sideways. I just said a new trend, as it has broken the previous sideways trend and a new trend is forming, period. You see, I'm not making assumptions.
No.
So yeah, I now said the market has just formed one high and one low so far. Yeah. So I'm going to wait and observe. So again, that's the trick about trading. Don't try and assume this. Just describe what you see and go with what you see. So it's the same with this moving average too. Then this went again. So now the market has now formed a higher high and a higher low. Now I can confirm it's an uptrend.
Yeah.
And now it's currently trending above R2. And then now I can place a sell order below R1.
That's right.
So I won't have, so it's just like with the moving average too. So at this point, at the beginning of the day, there's no way I could have known what was going to happen. Is that right?
Yes, that's correct. Yeah.
Exactly. So it's the same with the moving average too. Just do what it says you should do at the time and what you see. Period.
Yeah, what you can observe. Yeah.
Don't start thinking about what's going to happen in the future. What with this? What with that? So it's the same with day trading or trading in general. Just go and make your decisions based on what you see at that time. So back to the swing trading. What we see today is that the moving average today is 1.1803.
Yeah.
So from our current sell trade, we move our stop loss to 2 pips above that. And the pending buy order is 2 pips above that, period. End of story. Nothing more, nothing less. The market will decide the rest.
Thank you.
Pleasure. Any other questions? We'll do like the auction. Saying going, going, gone. So any more questions? Going, gone. Okay, good. So there are no more questions. I wish you all a good day.